under the African Exchange Linkage Project, which Nigerian Exchange Limited is a pioneer and one of the great members. And I'm very happy that the AELP also has some of the institutions here today as a member of the pioneer institutions for the African Exchange Linkage Project. But that project, which was launched a few months ago, is getting a whole lot bigger.
Africa is home to a vast array of capital markets, over 1.3 trillion in combined market capitalization. The fact of our diverse market versus the challenge of a silo-like structure in operations and interaction between African exchanges brought about the need to integrate African capital markets through a cross-border trading platform. I commenced SecondSTAX on the visionary solution to integrate capital market across Africa, and I also commend the various stakeholders who have been a part of this project, including our Afrinvest, the Ghana Stock Exchange, the Nairobi Securities Exchange. Through this partnership, institutional investors across Africa, beginning with Ghana and Kenya, to directly invest in Nigerian capital markets via SecondSTAX transparent, easy-to-use, cloud-based portal. Institutional investors interested in the Nigerian NGS market, as well as Nigerian institutional investors interested in other African capital market, can leverage the SecondSTAX platform. As an organization, we support this product, which closely align with our ongoing efforts through the African Exchanges Linkage Project and the Pan-African Payment Settlement System (PAPS), geared at smoothing the cross-border settlements process in Africa while reducing costs associated with trading and currency exchange risks. As we launch this product today, we take a significant step towards creating a more efficient and seamless capital market ecosystem, which will harness the full potential of Africa's capital markets.
When we look today at the African continent, I think it's clear to everybody that AFCFTA is maybe one of the biggest topics that is being spoken about. It's the pulse of most of the nations and the leaders. And so for us as a market, we've asked, what is our version of that? How do we key into this train of AFCFTA? And this is the answer. Where, you know, the AFCFTA tends to wear a trade lens. How does a trader do business easier in other African markets? We have to ask that question about the capital markets. How can we also follow this train that we can help capital to flow freely? Of course, the ASEA had started this effort in the past through the African Exchanges Linkage Project. But I guess as we would learn through the course of this, what the African Exchanges Linkage Project has tried to do through, maybe you call it physical infrastructure, technology now seems to be also coming in there to perhaps try to leapfrog that, or at least to try to optimize that. And that is extremely good. So for us overall, this is a very exciting day. Okay, it's a very exciting day for our markets. The reality is that even if today the flows will not be as material based on all of the challenges that most of these markets are facing, Nigeria, we're familiar, is dealing with its own macroeconomic challenges. Ghana is no different. Kenya is no different. But that tide will turn at some point.
Today, the NGX is up year-to-date 29.5%. Market cap is 36.4 trillion naira, about $56.6 billion at the current official rate. Today, the Ghanaian Stock Exchange has 42 equities, of 37 companies and 2 corporate bonds. Market cap is 73.86 billion Ghanaian cedis, about $6.6 billion. The market cap of the Ghanaian exchange is about 13.7% of GDP and is up 29.8% year to date. That's Ghana. In Kenya, the Nairobi Securities Exchange lists 61 companies. Market cap is 1.5 trillion Kenyan shillings, about $10.6 billion. It represents 14.9% of the GDP, and performance year to date is 10%. So you can see these interesting dynamics of 3 markets. But if you look at the currencies, Kenya shillings is down 14.9% against the US dollar. Ghanaian cedi is down 12.9% against the US dollar. Unfortunately, Nigerian naira is down 40% against the US dollar. Now, in that environment, you can imagine if you had gone into the market at the beginning of the year using your naira to buy Bank of Ghana oil, you've effectively hedged yourself because you will not have suffered as much devaluation as keeping the naira on the similar company in Nigeria.
In terms of the dividends process, part of the reason why we have the sponsoring brokers in each jurisdiction is to consume that KYC process, make sure everything is happening correctly as per regulations, and they are setting up based on the account type. If you're trading in a fund, there's a custodian that will effectively hold your cash and assets, and so all the dividends will be posted in there. If it's an individual high net worth person, there's also a process that they've subscribed where they are custodying your dividends and giving you the reporting in your trading account.
For Africa's largest economy, with GDP exceeding over 400 billion USD, we know your pension funds as well has total assets under management exceeding 13 trillion naira. 16 trillion now, I'm starting to be corrected, naira. It's really awesome for us. We are very excited, and you have seen some demonstrations of what we are presenting, the value we are bringing to the table. So with what you saw, there are a number of things that are behind the scenes that makes this work, that you could not see it displayed. The first is the fact that the security protocols that we are employing to make sure that the trading that is happening within our portal is top-notch.
We sought to get some comfort from Afrinvest, and indeed got the comfort of Afrinvest and its commitment to ensure that this partnership will not be one that facilitates money laundering. Rather, it will ensure that it continues to abide by the regulations and the laws that prohibit money laundering in the Nigerian capital market. And we believe that it will also ensure, SecondSTAX will ensure that regulations such as that would also be followed in all the jurisdictions where they exist. So we are not seeking to transfer risks amongst ourselves. We're only seeking to improve investor experience, facilitate mobilization of capital, and just generally make the capital markets in Africa, particularly West Africa, a place for investments.